start with the discussion. So what are the expenses and all? So this module, as I said, this module is dedicatedly, which is for your expenses. So when we talk about expenses, so our main purpose is, see, as an accountant, we record expenses in the books of account. Why we record expenses in the books of account? Let me just tell you quickly. Expenses directly affect your need assets value of the fund, and that's what reconciliation and recording of expense transactions in the books of fund is a very essential one. All right. So if you see, if I take the, to understand expenses and all, like why will receive the expenses, think as a, fund. Let's say you're a fund manager and you have decided to launch your fund. Let's assume it you have launched it, your fund, which is GMT. GMT fund decided to buy and sell the security. If you decided to buy and sell the security, then you cannot directly buy and sell the security. What you required a broker account. Then only you can buy the securities from the open market or maybe from OTC market. OTC, it means over the counter, and exchange, it means which is a listed or a designated place like Nasdaq or National Stock Exchange or Bombay Stock Exchange, those markets. If you want to buy and sell securities from the market, then you required broker account. Broker, without broker account you cannot buy any securities as such. Then you also required custodians to manage cash payment, right? Cash payment or payments. If you don't have a cash account or if you don't have a bank account, how will you accept the funds from the investors? Or how will you transfer amounts from your bank account to other bank account? That's what you required custodians as well. Then legal advisors to manage your legal or registrations or compliances or any legal penalties or challenges if you received from the let's say government or maybe regulators. Then you require legal advisor team or legal advisors who can help you to manage your business operations. Then transfer agents and registrar help you to maintain the records for units, subscribe units or redeemed units, and also they help you to accept the subscription and redemption requests from the open market. Then you required investors, sponsors, board of directors, also advertisement or investment in a companies, investment managers, prime brokers, fund administrators like Apex and Citco. All right, you required auditors like KPMG. So now I have a question to you guys. Now you tell me why KPMG will offer free of cost auditing service to the GMT fund. Why they'll offer it? Let's say uh, here investment advisor is State Street Corporation. Why State Street Corporation will offer investment advisory service to the fund in free of cost? Let's say JP Morgan as a prime broker. Why buying and selling or trading support, whereas JP Morgan will offer to the GMT fund in free of cost? Why? Are they any non-profit organizations? No, they are profit-making organizations. They work for a profit, so it means they have their monthly or transaction-based packages where they offer to the fund administration houses, and they charge monthly subscription fees or maybe yearly or transaction based subscription fees to the fund managers or fund basically. All right, and then fund make a payment of those expenses. Depends on their agreement, depends on their, if let's say if they have an agreement where fund will make a payment daily, then fund will make a daily payment and he will receive daily transaction payment transaction information. If you see weekly, then he will receive weekly transaction. If you see yearly, then throughout the year you will have to carry out that expenses as accrued expenses, and at the end of the year you can make a payment of those expenses. So that's how your expenses come into picture in a fund business. So always keep one thing in mind, why we are working on expenses, because fund already opted services from the different counterparts, including board of directors, because board of director also charge fees like director fees and all. So they have, means fund already, see, fund is a legal entity, guys. Don't get confused. Fund is a legal entity. It means everyone charge expenses to the funds, and fund make a payment of expenses to everyone for their advisory, consultation, accounting, reporting, and other services. And that's what expenses come into picture. And it's your responsibility to verify expenses, verify cap, verify all related or required information before recording of expenses in the books of account. And if you miss to update or book the expenses in the fund, so it means that will directly manipulate or influence the net assets value of the fund. All right. So let's discuss the process of expenses, purpose, objective, and everything in details. So if I talk about expenses, see, this, this is one of the important, it comes under the fund accounting NAV package. The fund managers team book the fees in system for, let's say, for ABC funds, and send the notice to the NAV production team or fund accounting team to validate and check, report, and record correctly. So basically, fund manager or fund manager team book the expenses in their system, or they make a payment, or they'll send you the notice, basically, right? Notice and other records that you would see on a bank statement, basically. Let's say they have, fund manager send the notice of 500 USD for admin fees. You would see outgoing wire with expense, same amount, so amount will die. So statement plus ledger, even this will catch in Recon system as well. So Recon team, they can cross verify or verify and match it out. But yeah, so this is how your accounting works. All right. And this table, if you see in a accounting, you would see two types or two ways of to record the fees or expenses. Basically, fees and expenses that comes under expense, or penalties and all that comes under your expense. If you see, there are two types of expenses. Accrued fees. Accrued, it means fees has been earned but that yet to received or paid. So basically here in this case we'll say which is paid, yet to pay. It means it will be paid in the future. So that expenses should be your accrued expenses. And if I talk about now prepaid fees, prepaid, it means fees which has been paid already, right, to the let's say XYZ counterparts in advance. And there are two ways, basically, to record the transactions. So let's take the example, we have a quarterly accounting cycle. Every quarter we calculate the fees and all. So let's take the example of heads. Different heads we have: admin fees, audit fees, legal fees, and financial reporting fees. Two heads, if you see, we have for accrued, and two head for prepaid. Payment status also we have yearly pay, and already in case of this one already paid in Jan for full year. And this one means two expenses already paid it, and two expenses which will be paid at the end of the year. All right. So if you see the cap, it means total expense limit. So admin fees, which would be around 24,000, audit fees 12K, legal fees 36,000, and FR reporting fees 4,800. You can check all of these expenses in fund prospectus as well, because every fund maintain fund prospectus with the expense details. You can cross verify, because you would see this schedule in Geneva, or maybe any application. If you have the schedule, you would see in Geneva. So you can cross verify the schedule with Geneva, basically. Or maybe you can cross verify the schedule with your legal document if you have. Or maybe in case of prepaid expense, you can check with bank statement as well, or any LPA, limited partnership agreement, if any hedge fund maintain, or any mutual fund, let's say, have any scheme detail as such. So you can cross verify this information with the document or scheme documents, I would say. So if you see, if I split 24,000 fees across 12 months, it looks like every month it would be around 2,000. So same expenses if I split across all months, you would see the schedule of expenses like this. So it means if I talk about now prepaid expenses, see for in case of prepaid expenses, first you can record the transactions in the books of fund with this amount, and your accounting entry would be prepaid expense account debit to cash account credit. So total amount that you can update 3600 and 48 8,400 something. So total 8,400 something. And every month, so if you have a quarterly accounting, then here you can prepare quarterly accounting 900 plus 1200, it would be around 2100. So quarterly you can convert now this prepaid expenses into expenses account debit 2100 to prepaid expenses account credit. So this process would be your amortization process basically. Amortization, and in other word, you maybe see like expense realization or prepaid expense realization, because prepaid expenses we treat as assets, right, from current assets to expense. So that becomes your realization process. And also realization process, you can call it as a reclassification entry, right? Same amount it was as a current assets, but now after end of the first quarter, that assets it will be converted into prepaid expenses. So it means now you will have to change the class of that amount. So that becomes your reclassification of expenses as well. And in case of admin fees and audit fees, you can just accrue them. So accrue them, it means your accounting entry would be in that case. In case of this 2-1, you can prepare accounting entry where uh, accrued means expenses always be recorded to the debit side, expenses account debit to payable, liability always be recorded to the credit side. 200 plus 300, so 600 plus 300, so 900. So every month or every quarter, I would say, you can prepare this accounting entry and post the accruals. So this is what we can say, it's accruals. So accrual schedule that you would see in your system, but your responsibility is to post the accounting entry in the books of fund by referring your schedule. So this schedule already, as I said, you would see in your system. You can refer this schedule and post the accounting entry in the books of fund. So this is what your job come into picture, to post accounting entries by referring your schedule or amortization or expense schedule, I would say, or accrual setup. And this is what you can see in accrual setup as well. So we set up the expenses in the books of fund for entire accounting period or financial year, and we utilize that expenses throughout the year. All right. So let me take you ahead. So just take a note. You may expect the questions on prepaid expense and accrued fees accounting entries. So make sure you have enough ammunition to tackle to those questions. So in Apex and Sitco interview, basically you would see question around this. All right. So next, what is the goal of to maintaining expenses and all? So the goal is ensure expenses accrued correctly and even captured in the fund validation. And same for prepaid expenses as well. So whatever expenses prepaid, or you have fund manager process the payment of those expenses. So make sure you have captured these expenses and even recorded in the books of fund also, because that will directly create impact on net assets value of the fund. So here daily expense accrual process that you would see, you can refer They input, prior day total net accruals into expense spreadsheet. So check the prior day expense calculations. So maybe when we say spreadsheet, it means in your process you might see any PDF report or Excel based report and all. So you can refer that. All right. Update FX rate in the expense spreadsheet or in application. Nowadays, nobody refer that, sheet and all. So they directly calculate in system only. So you can update that in your system because Geneva, Investron, uh, Multifond or Aladdin, those are like, multi-currency accounting systems. So that will automatically convert those expenses into base currency and all once you update it and select the rate. All right. Check number of days, forward, backward accruals, fund holiday, if you have anything as such on the expense spreadsheet, and NAV alert, accrual calendar. Post expense via your application. So it means if you see any, new expenses or if you see any, payment as such, if you have received, you can cross verify with the bank statement and also check the, system records. If that ties, you can prepare journal entry in the books of account to tie the expenses. Even if let's say you have received, bank transaction, but if you don't have that accounting entry created for those, payment transactions, so it's your responsibility to create that, transaction in the books of account. Then scrap accruals and input expense paid on expense spreadsheet. If you have any, accrual paid anything as such, so basically your job is to remove the accruals or even to convert the prepaid expenses into expenses. So do that. Then tie out expense spreadsheet to trial via application and verify all that, reports and answer all NAV questions or queries if you have received as such. All right. Then additionally, so again check, ensure your all expenses you have captured correctly. All right. So here, if you are again fund manager or anything as such, or maybe let's a team lead and all, so your main responsibility is to put a control procedure that you have, captured everything. If you miss anything as such, that will lead to the again NAV calculation and all. So that's what your responsibility is, basically to cross verify and check and put, control procedure in place to verify all expenses and everything. Here the important is ensure the daily accrual that the application calculates equals the expense in a spreadsheet calculation. Then another is ensure all expenses are posted by tying out the sub ledger expense spreadsheet basically and general ledger. In a hedge fund accounting, we follow the, general ledger and sub ledger. All right. So I'll show you that as well in one of the session how general ledger and sub ledger works and how it looks like even. All right. Then I ensure all payable and expense balances are reconciled between expense spreadsheet and the application general ledger. So when we say spreadsheet, it means, as I said, it's just a word. Maybe you would say Excel sheet or maybe application tab in your process or in your company. You can refer that and identify negative payables on expense spreadsheet. You can identify negative payables or positive, whatever it is, expense payables that you have identified. So it should not be negative payables basically. So check that and correct it out. All right. So next is NAV alerts. If you have any NAV alert as such, check. Ensure impacts are reviewed on NAV alert. Any fixed expense accrual change, if you see any variable expense accrual change significantly, or different from change in funds, if you see, so check that and resolve that as well. So ensure differences are reviewed on a report only. So all differences you can review and even process it out or update it accurately. Then expense payment. Ensure there is a client authorization for expense payment and ensure the expense payment is paid from the correct expense account. So fund maintain multiple accounts. Sometime that happen, let's say your ABCD, is custodian account and ABCE is also custodian account. So let's assume it. The fund was processed from this account, but it should have processed from this account. That happened, and which is incorrect. So you might see internal transfer between ABCD to ABCE. That also transaction you would see on a custodian statement as well. Sometime that happened. All right. But make sure that process payment processed out from correct account and all. For authorization, you can refer the custodian notice. Without authorization, custodian never process any payments. Who send the authorizations? Fund manager team. They send the authorizations to the custodians with along with the signature, sign and signature, everything, and that's what they authorize the payment. So same later authorization later, you can also refer it for accounting purpose as well. All right. How prepaid expenses and total payables look like on your bank statement. Before that, let's quickly take a look of accounting entries. Note it down, please. When we record the accrued expenses in the books of account, we have already discussed, but I just want to brief it again. So expense account debit to accrual expense account credit in case of accrual recordings. So you can record the expenses on a daily basis, quarterly basis, monthly basis, yearly basis. So that depends. But anyways, if you have that accrued transaction, so you can post that accounting entry in the books of account. And when you post this accounting entry, it will directly linked with your liability side. So net payable, you can see I have just recorded it. All right. So you can see this. Don't check the other information. Check the only that highlighted one in yellow. Then when actually process payment, accrual expense account debit to cash, because when you process that accruals, cash will out, and cash impact you would see on cash book or cash balance. All right, you would see impact on cash side. So cash will out from the your fund basically, and it looks like this. So cash which is paid out, whatever accruals was, let's say it was paid out. So when you paid it out, so your assets, basically total assets will reduce. And when the asset reduce, so we record that transactions to the credit side. All right. In case of prepaid expenses, when you set up prepaid expenses, your accounting entry would be prepaid expense account debit. So basically it's assets that we treat to cash account credit. So in case of prepaid expense, your cash will reduce, but expenses will add it to the asset side. So prepaid expenses basically that never create any impact on net assets value of the fund. That would be remain same. But if you miss to record it, then in that case, it will create impact on net assets value of the fund. Then when we actually amortize the expenses, your accounting entry would be expense account debit to prepaid expense account credit. So this portion you can realized it. So in this case we have taken example as well. Let's say prepaid expense amount is 5,000, but realized it means, let's say in within a quarter or month we have realized around 3,500, and rebate it means we got a discount or reversal on prepaid expenses which is 1,500. So net we have here 3,500 as a realization of expenses, so that you can realize it and update it on bank account. So this is how your accounting works. I hope now you got the idea about how you accrual expenses which are interlinked with your balance sheets. If you miss to record the transactions in the books of fund, that will directly influence your NAV, net assets value of the fund, and NAV will goes wrong. All right. So now let's discuss the further part. So information flow for this particular thing, information flow, it means how information flow down, means upstream teams and downstream teams. So source of information, which is accrual basically and prepaid expenses, expense budget provided by the client, also provided for audit, legal, miscellaneous, etc. Even you can check the fee schedule as well. Check the prospectus for management fees and expenses cap, and this will again help fund managers or management team to do quarterly expense analysis and all, to check whether it is overpaid, underpaid, paid or net payable, liabilities or net receivables and all, everything means everything. All right. So means from bottom to top. So all leaderships they required, or all analysts they required in this type of analysis and all. So now let's discuss about types of expenses. It is for a good to know basis, but you may see even in your interview process as well, like what are the expenses and how it works. If I talk about, let's say, types, so first type would be fixed expenses. The expenses budget is usually fixed and therefore daily accrual is fixed. So in this case, basically you can fix the expenses. Let's say if you have a monthly cycle, admin fees. So admin fees you have paid it, which is 1200 for per annum. So it becomes $100 for every month. So you can see here we have fixed $100 for every month so that you can accrue or you can record it or amortize it. So this is what fixed expenses it means. You have a fixed cap. All right. So when we say variable, the expense accruals is depends on other factors as well. So in case of, let's say, management fees, that becomes your AUM base, right? And in this case, how can I fix it that management fees? In a private equity, of course, I can fix it on the basis of commitment, but in hedge fund, it's a bit difficult to fix that NAV. So that becomes your variable expenses. Tied expenses. So it means you can create a class, right? Similar to variable, the percentage and rate depending on the asset levels and all. So you can, if you have any different, let's say, funds, fixed income, or maybe equity based funds, maybe derivative based funds. Derivative based funds always they charge high fees. Fixed income based funds they always charge low fees. Equity based they charge moderate level of fees. So that's what you would see, structure in place as well. Then expense cap. The investment manager might set up annual, expense cap. Cap it means let's say limit. So this is becoming your cap. All right. To the fund operating expenses. And if the operating expenses is above the expense cap, then fund manager will reimburse the fund for the expense coverage and all. So basically then fund manager will have to adjust that or paid out that expenses as such. All right. So I hope now you got the idea about fixed, variable, and cap expenses also. Then what about prepaid expenses? We have already discussed about prepaid expenses. Fund might pay certain expenses in advance to cover expenses over a future time period, and in such a case, the fund will set up prepaid expense and amortize it over this time period. For example, let's say admin fees, which is prepaid one, paid in the month of January only for entire year, means January to December. Let's say you have a quarterly accounting, so every quarter you will convert $300 as a expense to prepaid expense account credit. This is what you can update your financial statement as well. So it means you can minus that amount from the prepaid expense and transfer it to the profit and loss account debit side. Organizational expense. So in this case, fund might incur certain expense upfront in setup instead of taking the organization expense at once. Certain accounting standards allow the fund to amortize the organizational expense over certain time period. So that becomes your organizational expense. So organization, it means if I talk about, let's say, AMC will have certain expenses if you want to set up a new fund. So that comes with cost, like regulatory cost, then deposit, then the other approvals or certifications or government agencies that charge the certain fees and all. So that expenses becomes the organizational expenses. Sometime that expenses fund will directly recover at the time of subscription request only. So fund will ask investors to process, let's say, xyz amount in advance only, and that's what sometime when you received high amount with the subscription, so you can check that whether it is organizational expenses which is incurred or applied, and that's what investor process payment, let's say, higher amount than the receivable. So that's how you can even check or recheck or even cross check with the other senior accountants and all. Then the next head is or type is multi-class expenses. So in fund level, in a fund accounting, you would see different structures that we have: standalone, then multi-series accounting, composite. There are many more other as well. All right. So if I talk about composite, expenses incurred or accrued at a composite level and allocated proportionately to all classes. Depends on the structure, what structure that you have. So you can calculate, let's say in case of master and feeder, you can calculate expenses at master and allocate expenses to the feeder, right? Or maybe you can calculate expenses at feeder and you can allocate to the or ask feeder to book it in their books of account as well. So that also happened, right? Class level, it means expense rate might be different among classes or certain expenses are incurred for a specific classes, only these expenses are allocated at class level and will be aggregated at composite level. So I have an example for this so that I can narrate in details on next screen. So if I talk about, let's say, class, so this has become your class. See, under fund, you would see different series, and under series, you would see different classes. How we create a class, or what is the base that you would see? We create a class on the basis of investment instrument. Let's say this class is for equity, this class is for bond, this class is for derivative, this class is for uh, let's say loans. This is how your classes come into picture. So class we create on the basis of investment instruments, on the basis of risk, on the basis of investor investment objectives, on the basis of even fund investment strategy or objectives. So that depends. That's how we create a class. But under fund you would see series, and under series you would see multiple classes. We prepare basically accounting for each class. We record subscription separately, we record investment details, buy and sell separately, we record expenses, income, redemptions, valuations, journal entries, trial balance, everything. Means we record, prepare and record everything. Everything means everything separately. The same way here, let's assume it, for class A expenses we have 150, then class 2 we have expenses of 50, and for other classes we have 200 and 100 expenses. If we just do the total of all of this, 300 plus 300 200, it becomes 500. So total expenses would be 500. This is what you can see one transaction on bank statement where fund manager process payment for all different classes and all, or maybe you have received payment or recorded payment on behalf of all classes and all. So vice versa, you would see that transactions, but yeah, it's your responsibility to cross verify all the expenses and process it in the books of account under each class, each series, and even funds if you have anything as such. All right. So I hope now you got the idea about how we record the expenses under different series also. Let me take you ahead. What are fund expenses strategies? So this is something which is high level of input. So let me just quickly brief about what are fund expense strategies and all. We have discussed types, we have discussed examples, accounting entries, and how it looks like on NAV statement. We have discussed, or balance it, I would say we have discussed that as well. But now we'll quickly walk, I'll walk you through the different strategies of expenses and all. All right, how fund managers works to keep fund expenses to minimum, and this lower the expense paid by the limited partners and provides more capital for investments. So here are common strategies. So let's see. So you would have heard word about cap. Cap, it means the most common strategy to manage fund expenses is to set a caps. So it means limit. Funds typically set an organizational expense cap which is around $500 to $1 lakh. Occasionally, even that can be increased up to $1,50,000 as well. For more complicated formation, right? And these are normally set at or below market rate, often requiring managers to go out of pocket on the setup as well. Managers typically set an informal annual cap for the operating budget of the fund, and these are also traditionally set at or below the expected budget, forcing managers to go out of pocket as well. And if a fund has a multiple partners, there may also be cap per partner or on a spending per year. The fund expense for ongoing fund operations are not typically capped in the LPA, means limited partnership agreement, as there can be an expected expense relating to liquidity events or lawsuits as well. So it means on top of that, even if you set the caps, sometime you would see penalties, liquidity events, or anything which is unexpected. So that also expenses you can, means fund manager will cover it, but that would be on and above your caps. Cap, it means it's just a strategy. So initially only or at the beginning of the period only, so that you can, or fund manager will set that expenses, how much expenses can be incurred to manage all of these operations. And also that cap would be your basically, which we refer in the fund book as well, while recording transactions and all. And even in interview also, I'm sure you would definitely expect question around this, what is cap and all. Cap means it's just a limit where fund manager just design that how we can spend expenses and everything throughout the year to generate more returns. All right. Then the another type which you would see, one is cap. The next strategy that you can design policies around expenses. Another common strategy to manage fund expenses is to create policies about what can be charged as a fund expense. LPA is often vague about what is and what is not a fund expense, allowing managers discretion on what to charge. Policies help the managers to set guidelines that help to meet the annual budget caps. For example, a fund may reimburse travel for a board meetings at a coach ticket price, and then the partner may choose to fly business class by picking up the remaining ticket cost. Another example may be limiting conference attendance, deal legal and diligence expenses as well. So it means fund manager can design policies and discuss with partners, and same policies can be followed while recording expenses in the books of accounts. So it means fund accountant also will follow the same. And that's what in accounting team, fund accountant just received transaction and notices details. So on the basis of that, fund accountants record it. All right. So third strategy is consistency. A best practice is to ensure that the fund expenses are consistent from year to year. For example, if you decide not to include travel and entertainment expenses one year, then you should not include T&E in another year as well. So similarly, if you are attending two conferences in a year and then jump to 10 conferences the next year, that may be flagged by limited partners. So it means there should be consistency maintained in your accounting procedure. Otherwise, you cannot record that expenses. Then, fourth type that you would see, management. Another best practice is to carefully manage the expense with strict accountability. To help achieve this, new and emerging managers often pay for expense out of pocket and then seek reimbursement according to their caps and policies rather than changing expense on a corporate card. Managers commonly go through line of items on bills to see which individual charges are fund expenses and which are not. So I would highly recommend, as an accountant, without reading policies for expense recording and all, you shouldn't record any transaction, miscellaneous transaction in the books of fund as an uh, you know expense and all, because this is something critical part. Sometime what happened, like let's say fund manager utilize fund amount by or for his let's say personal traveling and something else, and that notice let's say fund manager sent to you to record it. So that doesn't make any sense at all, right? It's a clear cut fraud or cheating that the fund manager is doing. And that's what you need to first read all policies and procedures to maintain accounting records transparently, because you're an accountant. If you go back and check it, 90% frauds incur or happened just because of bad accounting practices, because you guys don't check it anything. The reason is you have a loads of works on your head and you're running out of deadline, and that's what you don't verify the sources. You just book the transaction and you try to just close the deadlines. But what if let's say you did this such an activity for 1 year, and then at the end of the year you got to know that your fund is now going to bankrupt. Why? Because of fund managers spend hell lot of money on different things, and you have accounted it and finally got to know that expenses are now high and total fund asset is low. That also happened. That's what accounting matter a lot. Accounting is a very critical job. And finally, final things that we have is final strategy that you can say, sharing. The final best practice is to share certain expenses with other entities to reduce the fund expense when leading a deal or venture capitalists commonly have a cap. So same, for a hedge fund that you will see, they also maintain a cap. And anything above that cap is covered by the portfolio company. Another example is when a limited partners require an audit, and the venture capitalist may ask the limited partners to cover some or all of the cost of the audit. New managers commonly keep fund expense to an absolute minimum and often pay for most of them with the management fees, and ensuring that limited partners do not get any hit with any surprise fees, and also have the most available capital to invest. So eventually whatever expenses that you have, you can share amongst all the partners. So this is one of the, I would say, strategy, so that fund manager can follow it while recording or counting expenses in the books of fund. All right. So yeah, so how do I manage the expenses? Again, if you have any questions around this, so there are different steps that you can follow. First step is read the LPA. I always urge people to read the documents, read the LPA. The first step is you can read the LPA, so that provide you expense plan and everything, and then you can follow the same. All right. Then set the organization expense cap. The next step is fund manager. Of course, it will set the expense cap. Cap could be 50K, 100K, 150K, depends on the complexity of the fund. Then develop an annual budget. For expenses only, you can assign budget, calculate it, and then update it in the books of account. That's how you can follow it. All right. And finally, you can create fund expenses strategy around the cap, right? Decide how much of the annual fund expense budget will be covered by limited partners, and how much will be covered by the managing partners. So decide it, means within a partners, and then after you can definitely allocate it, because as an accountant your main job is not to design the expenses and all. Your job is to record the expenses in the books of account, right? Track the expenses, implement system to track and reimburse fund expenses on a quarterly and annual basis, collect all receipts and invoices that can be considered a fund expense, and track them within your annual budget. And when any fund expense are looking to be over budget, work with the vendors or partners to reduce the cost or adjust the budget and the caps accordingly. So basically, fund manager maintain all of these receipts. All right, and even fund managers team, they maintain all of those receipts and send it to the fund accountants to record it in the books of account. And fund accountants, they record it basically. Develop fund expense policies after collecting some real expenses and experience. Work to set up fund expense policies to keep cost within the target annual cap, and as the more expenses are accrued and more experience is gained, work to update your annual expense cap and policies to keep fund expenses to minimum. Fund expenses become easier to manage over time. If you have questions about fund expenses, please, again, I would request you leave the comment below. And yeah, so we are done with the strategies, and also it was in detail, I'm sure. It was like detailed discussion, right? And you would love with this. All right. So few other terms that I would like to cover, which is forward and backward, we have already discussed. What is forward accruals? So it's very important to understand your accounting days. Let's say you have a month of in the month of March, what you would see, this 29 30 or 31st, which is your non-BD. Non-BD, it means you will not go to office, or you will not calculate anything, market will off, because it's a Saturday and Sunday, right? And in every month we calculate accruals for 30 days. So let's say your daily fees is 40, right? So it means in the month of March, you will have to do the accounting of 30 and 31st, 30th or 31st, you know, uh, fees that you will have to calculate on 29 only, because 29 become your business day. right, which is Friday, you would be in office. You can calculate expenses, let's say daily, which is 40. You can add 40 plus 40 for next 2 days expenses as well, so that you can update it. So that will directly publish on a first of let's say April. So this is what your forward accruals work. So it means due to weekend, right? If you're working on Friday and if you consider the expenses for coming, Monday or Tuesday or any days, today only. So that becomes your forward. So it means future accruals you can consider today and update it in the books of accounts. So that becomes your forward accruals. What about backward accruals? Backward, it means accrued income or expenses for a weekend on Monday. So in this case, in the case of again March, let's say not a March, the month would be different one. So I'm sure month would be maybe, let's say, January. In the month of January, what you would see scenario is like 28 and 29, which is Saturday and Sunday, but Monday and Tuesday that you have. If you work here, right, this become your accounting date. If you work here, so on 27 you don't need to calculate anything, but on Monday you can consider the expenses for 28 and 29. So that becomes your backward accruals. So basically when you work on Monday, you can consider work expenses for weekend as well. So for Saturday and Sunday, so that becomes your, actually that becomes your backward accrual. So backward accruals that you can consider, calculate and update it in the books of account on Monday. So basically you will calculate expenses for 28 and 29 and update it in the books of account on Monday. So that becomes your backward accruals eventually. All right, let me take you ahead. So yeah, so I'm done with your expense calculation module or expenses module. So we are pending with incentive fees calculation, but I'll uh, I'll cover that incentive fees calculation part in a separate session, so that you can have a in detail discussion on incentive fees only. Because if I would have added this incentive fees and everything over here, or even management fees for that matter, so it will take time to cover that all of the content and everything in one session. So this will not help at all to go through it. That's what I have covered the fund related expenses here only, but your incentive fees and management fees, that will have will have a separate discussion and we'll cover that as well. So meanwhile, I would request you to to provide your feedback. How was the content? How was the session? Whether you got the resolution of your doubts or not, you can provide your comment in, or you can provide your feedback in comment section as well. All right. So yeah, we'll see you in another session or module on different topic. So yeah, meanwhile, you just enjoy this one and try to take a notes, guys. This will help a lot, because trust me, my 90% client got selected by you know reading or watching this content only. It's a very very relevant content. Hedge fund, mutual fund, private equity, even the other interviews, it will easily you will crack if you spend your time